Okay, so the Central Bank of Nigeria is not letting up in liquidity mop-up yesterday, 200 and 300 and, beg your pardon, 320.97 billion naira treasury sales via the open market operations. That's also a part of what moved short-dated yields on short-dated treasuries back to double digits. Let's get Thaddeus Udegbe of UBA to speak to us. So the Treasury is a member of the Treasury sales team at UBA, live to us from FMDQ Exchange Place. Thaddeus, very surprising. We're saying short-dated treasuries yields climbing back to double digits because the central bank is not letting go of liquidity mop-up.
Thank you so much for having me. Yeah, I will start by looking at the yield curve. If you look at the yield curve week on week, you find that we noticed a rotation in the yield curve, what I may call a non-parallel shift in the yield curve. As the short end of the yield curve, we saw an increase in yield, while on the long end of the yield curve, we saw a decrease in yield. Looking at the one-month benchmark, we saw an increase of 25 basis points, so a yield of about 11.9%, while on the long end of the yield curve, looking at the 10-year benchmark, we saw a decrease in yield of about 14 basis points, closing at about 14.9%. Like you earlier mentioned, the monetary operations of the central bank accounted for the performance of the yield curve, especially on the short end of the curve. The central bank continued its daily open market sale of treasury bills, mopping up about 640 billion as at yesterday, against 315 billion that matured in the system during the week. And so this tightened the interbank liquidity and also kept money market rates at above MPR, as we saw money market rates over around 16 and 21%, which is fairly around the SLF rates.
So where is the buy sentiment now, Thaddeus? Where is the buy sentiment for investors?
Yeah, if you look at the yield curve on the long end, you find that it seems to be some confidence coming into that space, because what happened in that space this week is a bit of a surprise to us, because we do not expect the demand that we saw in that long end happen. As yield dropped to 14.9% from 15.1 levels that we saw last week. If you ask me, I think investors are beginning to price in a successful election come next week. And if you also marry that with what happened at the gradual recovery we are seeing at the NSE, at the stock exchange, you find that there's some level of confidence coming into the long end of the yield curve.
Okay, so where does that leave the market as we step into next week? Do you think we'll still see more bits of steady inflows, appetite as we get closer to next week presidential election, which of course is the big elephant in the room?
Yeah, coming into next week, I think what we saw this week will continue because I think it's a measure of confidence that the election will come up smoothly. So I think the flows will continue. And if you look at the domestic money market, the liquidity is already tight, and we expect that to continue into next week. We expect rates to remain elevated, the money market rates, and we expect on the short end of the yield curve, we expect some bearish sentiment to happen, to continue until next week, Thursday, when about 780 billion maturities will be repaid into the system. That is expected to douse rates by Thursday next week.
Yeah. Yes. Again, I'm sure the central bank does not like too much liquidity hanging around or lying around on the floor in just weeks to elections. I'm not sure central bank likes that.
Yes, exactly. Like you said, we expect the tighter monetary policy operations to continue on daily basis up to next week. And so that will keep rates very high coming into next week. But around Thursday, you have a lot of liquidity injections, which will put downward pressure on rates on that day. So on that day, we expect also special movement to happen, and that will keep rates elevated.
Okay, we'll look forward to next week. And of course, our GDP and inflation data will be out next week as well. So it's going to be a very busy one for you folks at the debt market. Thank you very much, Thaddeus Udegbe, Treasury Sales at UBA. We do have a great weekend, and we'll see you in the future.